for a target of 450 for tomorrow.
Okay, all right, Mitesh, thanks a lot for that. Well, let's get in Dipan Mehta, Director Elixir Equities, who joins us. Hi, Dipan. Dipan, before we talk about other stocks, I wanted to ask you about the real estate space. Oberoi Realty, the stock has seen a fair bit of a correction. I think the high was around 1,100 or thereabouts. The 52-week high at around 1,050 in November. From there, it saw a bit of a correction. Now, the stock in the last few minutes as well has seen a bit of a spike up, but at around 950, 960 odd. What's your view on the space, first of all, that's real estate space, and in particular on Oberoi Realty?
Yeah, good afternoon, Nigel, and thanks for having me on your show. We're very positive on the real estate space, and we are seeing the beginning of a multi-year upswing within the sector, and that will give confidence to a lot of builders to increase the kind of construction activity they have underway. Prices have stabilized, volumes are picking up, there's consolidation taking place within the segment. And most real estate companies now are focusing on cash flows rather than just adding to the land bank. So very positive on the sector, and Oberoi Realty certainly can give very good returns over the next few months and quarters. It's been one of the conservative real estate players, and they focused on a specific geography, that being Bombay and the areas around it. And never has it been in any kind of a trouble when it comes to leverage or even corporate governance issues per se. And they have reasonable rental income also coming in from the mall and the hospitality assets which they have. Valuations have always been premium for Oberoi Realty, but very well justified. So very positive on both the stock as well as the sector.
Okay. Dipan, afternoon, hi. Any hospital names you like? We had that big deal in Max, which happened. Fortis is something which, of course, is not the cheapest, but at least amongst the large national chains, hospital chains, maybe it is the cheapest amongst those. And then there are others. I mean, there is Kim's, there is Kovai Medical down south. Anything you like there?
Good afternoon, Prashant. And you mentioned about Kim's, Krishna Medical. I think that's an interesting company over there. Extremely well-managed company, very high efficiency ratios, and decent amount of brownfield expansion also gradually going on stream. And they've been having amongst the industry-leading operating profit margins as well, and dominant position within the area or the geography they are present in. So I'm very positive on that stock per se. It trades at a discount to some of the larger hospital chains as well. And going forward, I think as and when we see greater and greater occupancy levels or utilization levels going up, you will see operating leverage also come into play over there. So very positive on that particular stock. But the sector as a whole also is picking up very well. Of course, Apollo Hospital was a bit of a disappointment. But then I think we need to give them some more time for the new digital initiatives to start contributing meaningfully. But that apart, I think broadly, all of the companies are done pretty well. And if you are present or owe it, many of the companies, they are in good position. But specifically, I think at this point of time, we feel that Krishna Institute of Medical Sciences, KIMS, is perhaps best placed to provide some amount of outperformance within the sector as well.
Okay, Dipan, afternoon, the couple of stocks which are playing a bit of a catch-up are these PSU banks right after SBI, Canara, PNB and Bank of Baroda, the three big ones. Any views here?
Good afternoon. I know that investing in PSU banks has been propagated by many, I would say, investors, FIs as well, and domestic investors. But I'm not a great fan of PSU banks. I think these are not great banks. These are not outstanding businesses also. And they will keep on losing ground to the private sector banks. I know they are cheap, and that may be one of the reasons to buy. But I've realized one thing, that just buying a stock because it is cheap never gives the best results or the returns. So while you have the top 4 or 5 private sector banks gaining market share, growing at 20% thereabout on a top line, bottom line basis, then I don't think there's a need to dabble into some of the PSU, the second run PSU stocks per se. If you still want to buy a cheap bank with a PSU tag, then I think SBI fits the bill perfectly well, and you can look at that bank.
Okay, all right. Dipan, I want to ask you about a couple of these insurance stocks. And everyone's talking about the good recovery that the market has seen. HDFC Life is a far cry away from its 52-week high. In fact, my director can pull up a year-to-date chart of HDFC Life and the Nifty. Well, the Nifty is higher in comparison to what it was at the start of this year, while HDFC Life is still down close to around 10%. Your view on the stock, Dipan, quality franchise, good management pedigree, valuation wise as well, not very, very expensive in comparison to what it was trading at. at around 590 rupees odd. How do you view the stock?
Very positive, Nigel. I think just give it some more time, and if the Nifty crosses past its all lifetime highs, then HDFC Life will not be much far behind. It has best-in-class earnings growth, and particularly impressed with the kind of innovative products they keep launching. Strong, aggressive leadership as well, and of course, there is the HDFC brand, which enables it to leverage and the retail network also of HDFC Group, but certainly benefits the company. So it's a market leader, and I would say a premium player. And if you want to buy to just one insurance company, then certainly you could look at HDFC Life. But the outlier could be LIC. I think we saw the interview on your channel today, and I think good developments taking place over there. I have been disappointed with the company in the past, especially them not disclosing their EV. But maybe you should give it a bit of a chance and see how that plays out.
I got that. In terms of hotel names, Dipan, anything you like now after the moves we've seen? And specifically, do you have a view on Taj GVK? I mean, we discussed Lemon Tree, Indian hotels quite a bit. Taj GVK, any thoughts?
Prashant, I don't really track the stocks, so I don't want to comment on it. But I think you go for the best. I think Indian hotels is pretty impressive at these price points and can still deliver decent returns.
Dipan, stay on. We have a couple of more questions for you. But let's do one thing. Let's get you some more market opinion. Then in the morning, we spoke to DSP Investment Managers Vinit Sambre. Let's hear out his thoughts on markets and some individual sectors.
The results have been pleasant, I would say, while we went into the result season with some bit of caution around the demand momentum. But I think across various categories, we are seeing that the demand seems to be pretty okay, despite the spiraling inflation. So I think that is the one part which I think has come out good. And the more important aspect is that, with most of these commodity inflation sort of tapering off, there is an expectation that as we head into the next few quarters, let's say third and fourth quarter, it will, things should be better off from the profitability front for the companies. Plus, the ensuing festival season should also uplift some bit of the demand momentum. So I think all in all, that has got factored into the markets level today. And the way to sort of think, maybe from the levels perspective, I mean, there's no point in sort of predicting these levels, as we generally get caught on the wrong sides most times. But I think more importantly, the fundamentals seems pretty good right now. Most of the large segments, they seem to be sort of on a cyclical upswing. I mentioned about auto. Real estate is doing well. We saw the order book position of a lot of these engineering and capital good companies. I think they are at their all-time highs today, which is also a signal of a lot of activities which are happening and sort of likely to benefit these companies. So I think some of the larger segments, and banking, one of the largest, is actually started showing good credit growth. So all in all, I would say things are being on a cyclical upswing.
Consumption has come back in a massive way. In fact, it's a bit of a deja vu. Consumption and those financing the consumption are leading this run once again, which is what we had when the last bull market started, before IT took over. But your view on how some of these stocks have moved up, the consumption names, both discretionary and non-discretionary?
Between the discretionary and the non-discretionary, I would say that with the opening up of the economy, I think there is a good amount of uptick which we have seen across few categories within the discretionary. Largely auto right now seems to be pretty resilient, and we were sort of anticipating some bit of cyclical uptick there. So that has come out well. But I would assume that when we look at the data points of most categories which are likely to be beneficiary of the opening up of the economy, people going out and spending, I mean, those are happening. The urban centers and the metro centers are doing well. But the one side, which is the rural and the entry level or the mass category, is struggling a bit right now, which to us also is most likely, should come back as we see, some of the rural outputs coming out better with good monsoons and good reservoir levels. So I think overall, the consumption trend, we would like to believe or prefer the discretionary over the non-discretionary as of now.
What do you think the sector of the year could be from here on?
I would say that, within discretionary, you have auto, which, we would sort of continue with our view about the cyclical upturn there. That's one, that's a large category to think about. Then there are smaller, categories which should benefit, let's say, within the retail, I would say footwear, the food retail companies. I mean, these are the ones where we are optimist, and we hold them in the portfolios as well.
Could you just talk to us a little bit about, without naming names, what are you bullish about? Valuations again there, are they too high? Are they still reasonable? I mean, we don't have that many listed now. We got a new one and a bunch of old ones.
So, actually, the industry has gone through, cyclical downturn because of COVID. We had school, colleges, offices all shut. And now, most of these institutions, as they open up, I think the demand momentum should also normalize. So, the category, it's a 80,000 crore market, and the companies here, they organized maybe 5 or 6 of them who are large, leading companies with good distribution, trying to do a good job in terms of the brand improvement, the positioning. I think these are the companies which I believe, and anyways, the footwear, overall usage pattern in India is improving. People wanting to have, footwear for different occasions.
Well, just take a look at some stocks, the way they're moving. Happiest Minds, when we started the show, it was up closer around 7.5-8% odd. It's up closer around 12% now, so that's spiked to the high point of the day. It appears there is some value unlocking exercise by ITDC as well. So that stock, in fact, is up closer around 12% as we speak. There's a BSE notice out there, and also maybe that news flash with regard to some bit of support for the hospitality sector as well. So that could be playing out there. Volume's not very, very high normally, but that one as well has spiked up. Well, Dipan, before we wind down then, today what's having a bit of an off day is some of the cement names. The likes of Shree Cement, they have not participated. You have Ultratech Cement as well, that's a little bit lower. But going ahead, things are going to look up, hopefully, in the second half of the year. How would you view these stocks, given that valuation-wise, they're trading at a bit of a discount in comparison to what they've traded at, say, on an average for the last 5 years or so?
See, Nigel, by and large, cement companies came with a disappointing set of numbers, and we are seeing a great amount of capacity build-up coming up. A major player has entered into the cement industry, and that's certainly going to shake up the existing players. And the cost increases, they continue to, kind of affect the operating profit margins. And while there are so many other sectors like tech, banking, automobiles, I think they're doing pretty well. So investors' choice should be in those higher growth sectors rather than cement at this point of time. I would still prefer to go with the cement consumers, the real estate companies, the construction companies. I think there's good value over there and scope for outperformance. So I would give cement a pass for the time being.
Okay, give cement a bit of a pass for the time being. Well, the market's cooled off a bit. It looked like it was going to end right at the highest point of the day, but just maybe in the last few minutes of trade, there's been just a bit of a profit-taking move which has happened. Nothing wrong with that, because the market's almost giving you daily an opportunity to make money. So, maybe why you want to take the risk of any kind of a gap. But if you look at individual names, just a couple of names which stand out. Tata Motors is seeing some profit taking, and Tata Steel as well. So both these names actually seeing a bit of a decline. Dipan, a word on both Tata Motors and Tata Steel?
See, I think we've been very negative on commodities, so wouldn't want to buy into Tata Steel. And Tata Motors quarterly numbers were also disappointing, but certainly there's potential in JLR considering the kind of order book position they have. But, there's an amount of patience that one can keep in the stock. Every time they keep on talking that they have the bookings, but there are supply constraints and the numbers never come through. So maybe I think it's better to give some of the other auto companies like M&M, which came with a very good set of numbers, Eicher Motors, or even Maruti. I think maybe this time round, you could see outperformance from these companies over Tata Motors. And by and large, I think Tata Motors' entire EV strategy and the value unlocking over there, that has not or less been priced in. So I would expect Tata Motors to be at best a market performer. But some of the other auto companies I just named just now, I think they could give very good returns over the next 3 to 6 months or so.
Okay, Dipan, thanks a lot for joining us and have a good evening. Let's start wrapping up the market action then for the day. It's been another strong day for the bulls and really just non-stop. The Nifty up 107 points, very close to that 18,000 mark. The Sensex is closing above 60,000. After 5 months, we will have a close above 60,000 on the Sensex. That itself calls for cheers from the bulls, right? And the mid-cap index also did well. In terms of individual names on the Nifty, IT stocks led today. So we had names like Tech Mahindra, which was higher, Wipro as well, HCL Tech did well, Bajaj Finserv and Bajaj Finance, they have been stunning all through the last 2 months, and today as well, Bajaj Finserv was the top gainer, 6% higher on that one. Hero MotoCorp up 3%, Hindalco was higher by about 2.5%, Tata Consumer rather, Eicher Motors, NTPC, HUL, Grasim, ITC, all these stocks moved up 1%, Axis Bank as well, which was enough to make sure that the Nifty gained by about 100 points. There were a couple of losers though. Apollo Hospitals, that's been an underperformer. That's down about 1%. Tata Motors was down 1%. Mahindra was down 1%. So clearly some profit taking in a couple of the auto names. You can throw in a Maruti as well. And Ultratech Cement also was a bit weak. But otherwise, Prashant, it's just been stunning the pace of the market. Right?
Oh, absolutely. Big gains, 100 points plus, 35 points off the high point, of course, in the last couple of minutes of trade. Just broader market, Z is broken out. I mean, it broke out a few days ago out of a downward sloping trend line, and then it failed, and today it's broken out of that once again. So let's see if this is more to go. 251. Nigel, of course, mentioned Happiest Minds, 11%. Gujarat Alkali is another one. Huge volumes, and we spotted this when markets open. Ends about 5.5 higher. Hikal up 9%. ICICI Securities was up almost 9%, 533. Aarti Drugs, again, started strong, ends about 11% higher. Chennai Petro, 5%. Force Motors, 13.5%, something we brought up on the show in the last hour. Rate Gain was up 8%. NDTV, 10% higher. Limit up, 331. And so on and so forth. So lots of action in the broader market space. Nigel.
Well, so it was a good trading session on the whole. The Nifty goes home with a gain of close around